All right, welcome back to the podcast, everybody. I am Eric Bruns, and with me is my buddy, as always, Stephen Brock. Stephen, say hi.
Hello, everybody.
Yeah, that
Or
was a
hi.
riveting introduction right there for me. Great job. And with us today is our special guest, Chris Euart, the owner and CEO of Trusted Insurance Brokers. Chris, welcome to the podcast, man.
Thank you. Excited to be here, guys.
Yeah, I know today we want to talk about some fun stuff that's on everybody's mind, especially here in sunny South Florida. Homeowners insurance and all the fun stuff with how the prices and all that seem to keep going up. So we'll hopefully try to educate everybody on what's exactly going on in the insurance market out there, and maybe some strategies you could look at for trying to better yourself in the future to try to keep that pain point a little more manageable. So I guess kind of this is more you guys' wheelhouse. I mean, I'm looking at this type of stuff with clients periodically, but I'm not an insurance broker. I'm in the overall financial planning space. So I know one thing we see a lot lately of big changes are kind of the flood insurance stuff. So I don't know if Chris, you want to give us kind of a rundown of kind of the changes coming with flood insurance here in Florida?
Yeah, well, I mean, there were a lot of changes that were passed besides the flood insurance. That was actually just a small piece of it back in December. Um, but as far as the flood insurance goes, it's really geared towards anybody with a Citizens insurance policy. Citizens is the carrier of last resort. So they don't want to write your insurance. They don't want to have your policy on the books. So they're trying to find ways to kind of deter people from coming to them if they can. And one of the ways they're doing this now is by requiring flood insurance on their policies if you hold a policy with them. So it's not all at once. It's actually going to be tiered and broken down. I actually got the dates over here. So
Actually, real quick, Chris, for those that,
yeah.
I know we know what Citizens is, but for those that don't know, can you explain a little bit about what Citizens is and maybe why it's become such a popular insurance carrier?
Yeah, so I mean, Citizens was formed after Hurricane Andrew because of the fallout. All the insurance companies couldn't pay claims, and they bailed out of the state. They went bankrupt, what have you, and it left a lot of people without coverage, for their homes. So the state formed Citizens to be there as a last resort option for insurance companies for homeowners when they can't get a home insurance policy from a standard carrier. If that carrier denies them, if they can't find standard coverage or reasonably priced coverage, then they can go to Citizens, and Citizens will offer them some sort of policy, standard home insurance policy to protect their home, so that they have something to be able to comply with the mortgage requirements if they have a mortgage on their home or what have you.
Mm-hmm.
The trouble we're seeing right now is we're in what's called a hard market. And when we're in a hard market, that basically just means that the standard insurance companies do not want to write business because they're seeing insanely high loss ratios on their end.
What's kind of causing those insanely high loss numbers? I mean, I know we had a hurricane last year, but is there any other things that are kind of leading into that?
Yeah, so I mean that's like a very big question. It's a very common question that everybody's asking is like, well, I haven't had or filed any hurricane claims, or we haven't had a hurricane up until this point for 10 years. So why are the rates going? Well, it's not directly a hurricane that's causing these problems. It's actually indirectly the hurricane. So whenever a hurricane passes through, we've all more than likely seen it. You have roofing companies and attorneys that are going around and basically getting homeowners to file claims on their 20-year-old roof because a storm passed by and came within the range that they can get away with filing a claim saying there's damage to it.
Mm-hmm.
They find their loopholes and they go through it. It's just been a lot of fraudulent claims, on top of the roofing contractors going door to door, literally going door to door and saying, I'll give you $100 Ruth's Chris Steakhouse gift card if you let me get on your roof and just review it for you. And then they go up there They come back down like, yep, you got all kinds of damage up there from the hurricane. We'll file a claim for you. We'll take care of everything. You sign right here on this form, which is called an assignment of benefits, which basically, as a homeowner, you give up your rights to the claim and you hand that over to the contractor. The contractor takes that and runs with it. You literally, at that point, from that point forward, you don't know anything that's going on. I can't tell you how many people have said, oh, well, I filed a claim and, this year. So, okay, well, how much was the payout from the claim? Oh, I don't know. The contractor did it all. I never even got an invoice or a bill. So that's been the biggest problem. These contractors will do that. They'll have them sign over their rights and they'll run the bill sky high because they know the insurance company is going to pay for it. So it doesn't matter. We'll get this done. We'll get that done. We'll add this into here. We'll add that. So that bill just gets higher and higher and higher. So what should be the homeowner's responsibility to replace a 20-year-old or 25-year-old roof, whatever, shape or condition it's in at that time, they're now saying, well, if I only have to pay a small deductible, then I'll go that route. Now, the caveat to that also, or not caveat, but the other thing to that is the contractors are saying, well, we'll just inflate the numbers a little bit more to include your deductible. That way we still get what we need and you're good to go.
Yeah, that's pretty.
So it's been a lot of fraudulent stuff happening with that.
So then what does
the new law that was kind of passed, or the new legislation?
Yeah, so in the legislation that passed back in December, effective January 1, the assignment of benefits form is now very restricted. If not, I believe it's actually taken away for hurricane claims.
That's a pretty big change right there.
That's a huge change. It's just that's specific to hurricane claims right now, but
so there's still the door, like you said, the guys going door to door. It's still happening now.
Less. It's happening.
It is happening less though.
It's happening less though. Yeah. As with anything, they're going to find loopholes to get through and get around things, but a majority of it has definitely trickled down because they're not going to get the same results that they got before. They can't have them sign the assignment of benefits form, so that slows down their process. As a contractor, they're not able to just breeze right through, 15 homes, a week, whatever they want to do. But that's the biggest thing, that assignment of benefits form. Most homeowners don't even know what that is. They don't know what they're doing. I had a client actually reach out to me, or vice versa. We reached out to them. They were being canceled by the home insurance policy. And they're like, what are you talking about? And we're like, well, you filed this type of claim or whatever it was at the time. Like, you filed this claim and it was literally like right after we bound it. And they already had 2 prior claims. So frequency of claims becomes an issue at a point.
Right. And that's something not a lot of people understand, right?
Right. They don't. They just think it's there for them to use whenever they want because they pay the bill and they should have it. But
if you make claims, your risk level goes up according to
your risk level goes up very high. So now you don't qualify for the policy type that you had, or you don't qualify with that carrier anymore. So in this instance, they said, well, now you don't qualify for this policy anymore. So we're going to cancel it and you have to be rewritten into a different type of policy. And she's like, well, I never filed a claim. And we're like, it's right here. It has your name. It has all your information. She's like, no, a contractor came to my door and he, had me sign off like an estimate or something like that. But then we never went through with it. So she signed what she didn't realize at the time was an assignment of benefits form, and the contractor went after the carrier for everything.
So she had no idea.
Digging. She had no idea at all. So that took a lot of digging, a lot of, us with the communication with the carrier and kind of going back and forth between everybody to finally get it fixed. And we got her back into a standard policy. But, it's
so all these things is like why all these things happening over how many years, like 10, 20 years, maybe
at least. Yeah.
Is really all kind of culminated in making the just wasteland of homeowners insurance in the state of Florida these days. Would that be correct?
Aside from that, basically like the whole process, with and it's not every roofing contractor. So I want to make that clear. It's not. Right. I actually have a good buddy of mine that is a roofing contractor, and he's like, I don't touch those things. Like I'm so busy without it. I don't need any of that stuff. And I don't believe in that. We shouldn't be chasing storms to get business.
It's like a few bad apples spoil the whole bunch.
It's definitely a few bad apples, and it goes over to the attorney side, the attorney side as well, because And we spoke about this the other day, is there was an attorney down in Miami, single person law firm that did over 1,000 property insurance litigation lawsuits. Like,
That's insane.
one person doing over that much, it's just nuts, so that they're the storm chasers, if you will, and they see that's a quick dollar to make, and it's, well, hey, the insurance companies, they make a lot of money, so why not? Well, your insurance premiums right now are why not. You don't want to do. But
So
it's
I guess
just become that, and a lot of other things. I mean, when the attorneys get involved, there's the at the time, it's been changed now, but you had one-way attorney fees. So the insurance company had to pay their attorney's fees as well, on top of the claim that they had to pay out. And these attorneys would get fee multipliers. So their fees would be multiplied 2, 3, 4, 5 times, whatever they're requesting was. So instead of a $15,000 roof, it's now a $35,000, $40,000 roof. And that kind of payout, if the insurance company has the money, cool. But at the same token, the insurance companies have insurance.
Right.
And their insurance policies look at the claims and how much they're paying out. And they're actually responsible in some cases for a portion of paying out those claims. So when they're looking at all that, now the insurance company's insurance goes up. Are they going to just pay that and be like, okay, don't worry about it, we're good? No, they're going to pass that down to us as the homeowner too, because they're not going to want to pay that. And then we homeowners freak out about the rates going up. Why is this happening? Why is that happening? Well,
it's a lot of different things all working together. I mean, that's all those things create an inefficient market,
right?
Where now the prices aren't necessarily reflective of the reality on the ground, but that's the system we've dug ourselves into for the past 20 years.
And to be clear too, I mean, we've been in a very, what's called a soft market for a long time.
Mm-hmm.
Insurance premiums in 2014, 2013 were on average, I mean, in Broward County, probably around 2,000, 2,500 on average. Miami was around the 3,000, 3,500, sometimes $4,000 range, but that was like the higher end of the average home, I should say. But now, I mean, those rates are sky high, man. Miami, I'd be lucky to write a policy for $5,000, $6,000, as a good rate.
Yeah.
Is there a way that future buyers can combat this at all, or is it just you're?
I mean, it's for a lot of the time, it's kind of luck of the draw, depending on the location, depending on the updates of the house, and just depending on the carrier at that point. There's a handful of carriers that are still writing. I should say less than a handful. But just making sure that if your home is typically within 5 miles to the coast, or just around that range, you definitely want to dress it up for hurricane protection as much as you can and get that credit. That's going to be a huge credit. The further away from the coast you go, the less that credit becomes. So for instance, I'm about 10, 12 miles from the coast. That discount's like $100 for me. But somebody that's within that 5 mile range, that discount can be $1,000, $2,000. Like, it's a big.
Yeah. So what can you do, like hurricane prevention wise, to help get yourself that kind of discount if you're closer to the coast?
So when you get a wind mitigation inspection, that looks at how the roof is held down, how new the roof is, how it's tied down to the walls. And that looks at the windows and doors, to see if there is protection to cover them, or if they are rated for protection for hurricane resistance. So a lot of people are going out getting the impact windows. Some people have the aluminum shutters, the manual shutters that people put up over the windows. Those are going to be the same exact credit. So it's
there's no difference credit wise versus something you got to put up versus having impact glass.
Correct. It's really just preference, and because they're both rated for the same exact thing. They're both rated for the wind speed of X amount, 9-pound missile, what have you. So it's the same exact credit. It's just a matter of, do you want to have the hassle of putting up shutters or not, and pay the extra amount of money that's pretty hefty to pay for, but it's there. But yeah, I mean, it's been a lot of different things that have kind of led to this. And I kind of use an analogy of, when we were in elementary school and the class clown made the whole class sit out of recess. We're kind of seeing that where these people are coercing or either tricking or just flat out just getting people to get their roofs replaced and make the insurance company pay for it because you got to stick it to them,
Mm-hmm.
and they're only in it because that roof is going to pay them a nice paycheck, and they move on to the next one. They make another nice paycheck. The homeowner gets that done and then either gets a renewal bill for 3-4 times what his original rate was, or he gets non-renewed and now has to find another insurance company to take him with a claim. And now his rate's is definitely going to be higher than what he paid before. So
yeah, it's actually cheaper in the long
double-edged
run
sword.
to just
come out
replace that roof on your own.
I mean, that's the problem, is like people are using home insurance as a home warranty plan when it's not there for that. It's there for that major catastrophe when you can't, fix, all of a sudden you have this major damage and now you can't fix it. But when you buy a house, you're assuming the responsibility of upkeeping that home and updating that home for wear and tear as it comes due. Your AC starts going bad, you got to get a new AC.
Yeah, that's a good point about
the getting old, you got to replace it. So it's a big thing to think about when you're buying the homes. Those are your responsibilities. And they've really nipped a lot of this roof replacement stuff with this new legislation effective January 1 this year.
That's good. I mean, so that's actually a good segue into if you're buying a house. Stephen, how often are you seeing the insurance being the thing that maybe blows up a deal or causes issues if someone's trying to close on a house?
It definitely can, because it's one of when you go under contract, I know what the taxes are. I know what your principal and interest and loan amount is going to be, what your rate's going to be. The big question is always insurance. So there's a lot of lenders that, when doing the pre-approval to get the numbers to look how they want, will quote the insurance on there really low per month, instead of doing a decent job saying, okay, it should be, Chris and I were talking the other day and he's like, yeah, it's probably going to be, you could probably quote around 3,000 for this property. So I was like, oh, yeah, that's what I have it at. Like, that's perfect kind of thing. But if I quoted them 150, they go buy this property and that their debt to income ratio is right on the line. They're going to go through inspection, get the wind mitt, we push out for the insurance, and they're not going to be able to get it. So they could be a week, 2 weeks in and not be able to have it, kind of thing.
And hundreds of dollars in. They also have to put in that escrow, right? They have to put escrow. Now they're spending on inspections and all that, and all that time wasted for everybody. It's just,
you're not getting that.
Everybody loses money.
You're at least out the inspection. So whatever you paid inspection, wind mitts, $500, $600, $700 on it, that you're out. That's gone. Right. Just because the person that you went through didn't properly quote you on that, and not insurance quote, but just quoted you on your pre-approval and had that insurance block big enough. See a lot of for here. We see a lot when there's out-of-state lenders, online lenders, because they're not used to South Florida. So that's why it's becoming more difficult for people there. Right?
That's a good point. Yeah. I guess, how often do you talk to buyers or folks about the potential for their insurance increasing year over year? Because I know, kind of speaking from my own personal situation, when we bought our house here in 2017, our homeowners insurance is, I think, like $1,300 or $1,400 a year, which is maybe a little low. Now, fast forward to 2023, we're over $5,000 a year for all the reasons you kind of brought up. If you don't plan for something like that in the long run, because frankly, our taxes have stayed pretty level. Have they increased a little bit? Yeah, but maybe like $100, $200 a year. Principal and interest are obviously staying the same because it's a fixed rate mortgage. But yeah, the percent increase on the homeowners insurance is absolutely insane. Yeah. So I know if you're on the line, what's the likelihood that somebody is going to become house poor within a few years here in South Florida, at least, because of how expensive the homeowners insurance has become? it seems like a pretty significant chance that that's going to happen.
No, it really is. I mean, especially those with limited income, the Social Security and what have you. They're on a fixed income. It's definitely scary times for that. I have a few people that come to me, and I try to do everything I possibly can to help reduce that increase for them, without completely sacrificing the entire coverage they have. But there are instances where there's just nothing I can do. The rate is just the rate.
Yeah.
And it's a scary thought. But that's just kind of, where it's at. Unfortunately, it's just, there's no magic number. There's no, magic 8 ball that's going to tell me how much your policy is going to increase next year, because we don't get that information until after the fact.
Right. So the insurance market's pretty, to put it bluntly, it's pretty screwed right now. Right. I mean, it's messed up. It's years of mismanagement or things being done fraudulently has caused a pretty expensive, screwed up market. How long do you think it might be until things normalize? Now with the new legislation, hopefully making things a little better, the market maybe the pendulum swinging back the other way, more to the center. How long do you think it might be?
So it's this is just my opinion, based on what I've seen and what I'm kind of predicting, type of deal. But in all reality, with the changes that they've made, and I've talked to a couple other people about this, that are in different positions within the insurance world, and I think they agree. There's a lot of entities between insurance carriers and reinsurance companies that have backed out, that are either looking back in and trying to see what happens before they jump in, or new companies that want to come in, but they're like, I don't know if we want to touch that just yet. And I think with the changes that have happened effective January 1, we need to, in my opinion, we need to get another hurricane to come through so that they can see how everything kind of plays out. If that makes sense,
So
with all
it's
the
kind of like
changes that are
stress
there.
testing it.
It's definitely a stress test. Exactly. They got to see that the changes that were made actually create results before they're going to be like, all right, we'll put our money back in here. We'll start reinsuring again and giving better rates, because we know, that it's going to be a little bit, a better situation for us. We're not going to have to deal with the AOB, assignment of benefits, claims. We're not going to have to necessarily deal so much with these contractors and attorneys as bad. I mean, just to give you the stat, I mean, I think I mentioned this to you before, but Florida accounted for 8% of the entire United States property insurance claims, but we accounted for 77% of all property insurance litigation throughout the U.S. Just Florida. 77% of litigation, of lawsuits from property insurance claims, came from Florida, when we only account for 8% of the entire U.S. claims.
That's crazy.
Like,
it's almost like every other claim is a lawsuit or something.
Right. I mean, that's exactly what it is, because so many people were either just signing over that assignment of benefits to the contractor without knowing, or they would just, without even giving the insurance company a chance, they just go straight to an attorney and say, hey, fight this for me.
Yeah.
There's a lot of that. There's I don't have the percentages, but there is a very large percent of claims that were made that didn't come from the homeowner. They came from a third party, whether it be a public adjuster or an attorney or a contractor right off the bat. So it's like no one's even giving the insurance company the opportunity to adjust the claim to begin with. They're just like, oh, get the adjuster because they're going to screw me over.
Right.
It's like, I get it. Insurance companies are no saints. I'm not here to say that, but you got to at least give them the opportunity to make you whole. And if they don't, and you kind of go back and forth with them for a little bit, and they won't do what you need them to do, because that happens. I'm not saying it doesn't.
Oh yeah,
but
absolutely.
You got to take that through that process before you just jump into, an attorney. There was a lawsuit that happened where the guy needed $35,000 to fix his roof, and the insurance company was fighting him on it. So he went to an attorney. I'm sorry, the insurance company wasn't even fighting it. He sent the invoice in, and we were like, all right, we'll make the claim for you. And then he stopped responding. We're like, hey, we need this, we need that, we need this, to send to them, estimates and all that. He didn't respond. Next thing you know, we talked to the insurance company. They're like, oh, he filed lawsuit. So they settled. They gave him the money he needed, the $35,000. But how much of that actually went to him?
Yeah, how much went to legal fees and the lawyer?
It all went to legal fees. So now he's
Yeah.
still coming. Like, it was just a ridiculous, move. I mean,
So you feel a lot of times, it sounds to me like you don't want to get rid of people's ability to sue insurance companies because they're not saints. It's in their interest to pay the least amount possible to you for your claim. And sometimes it's not what you should be getting. So you should be able to fight them. But it sounds like you don't want to invoke the nuclear option of litigation too early. You want to do proportional escalation up the chain before you get to
let them do their job first.
Like, let them try. Let them try. And if you don't like the result, you kind of go back. You got to go back and forth with them. It's a give.
Yeah.
Hey, listen, I have the best thing I give. The best advice I give to anybody that's going through a claim is before you call them or start the claim. Let's start the claim. But while we're waiting for them to contact you, go get 3 separate contractors, and get estimates for the repairs.
Right.
Because if you come to them with 3 different estimates from 3 different contractors, there's no way they can sit there and tell you, oh, these are not right, and we're only going to pay this much because this is how much it costs to fix. Mm-hmm. No, I have proof that this is how much it costs to fix. Now, your coverage limits, that's a different situation. If your coverage doesn't, that you got to talk to your insurance agent about making sure you have the right coverages for everything. But on a standard, type of claim where you have the coverage for it, you present 3 options of contractors that are quoting you for these exact repairs that are needed. And they can't, there's no argument at that point. So if they argue, then that they're just, and then you could take that route, if you have to. So
you kind of brought it up right then, is your coverages. What do you, because I know I've sent you stuff and you're like, yeah, that's way too low, that's way too high, these are wrong, kind of thing. And then you kind of tweak it for the client just because of what else they've had before. What's something as a consumer looking out there, should they be looking for coverages? Because most people just look at that bottom line as like, how much is it going to cost me for the year? Right. But they have no clue what's covering them.
The biggest thing that I see right now is deductibles. There's the 3 biggest pieces to this puzzle right now that people are either cutting back on or what have you: deductibles and water damage. So your policy, most policies right now, unfortunately, are limiting water damage coverage in some form or fashion. So if you have a newer home, let's say less than 5-10 years, maybe maximum, if you want to make sure that you have full water coverage. Anything older than that, more than likely, you're not going to get it. Depending on the location of the home, you might not get it, or you might have to request it and go through an inspection process for it. But deductibles are a huge thing that people are just raising to make the costs lower. And what they don't realize is, for instance, the hurricane claim, a standard hurricane claim here in Florida hurricane deductible. Standard hurricane deductible here in Florida is 2% of the dwelling coverage amount. So it's not 2% of the claim, it's 2% of the dwelling coverage amount that's on your policy. If you have a quote, you want to look at that deductible, because some agents will bump that to a 5% deductible, which is the maximum, I believe, allowed by the mortgage company. And now you might only save like $100, but you don't know that because you're just looking at the bottom line. The deductible could be a difference from a 2% to a 5%, can be a difference of $10,000 to $15,000 out of your pocket. You can go from a $6,000 deductible to a $14,000 or $15,000 deductible at that point, just for that. And the difference on the premium might only be $100, $200 for the year. So at that point, why would you do that? Let's change that around. But there's a lot of sales agents, as I'll phrase them. There's a lot of sales guys out there that are just looking to get your policy on the books, and they don't care about you. They care about the sale. And so they won't explain that to you. They won't show you the differences because, like, hey, we got to move on to the next quote. So we're just going to quote this one way and be done.
I think that's a huge misconception people have about how the hurricane deductible works. I
Yes.
think I don't think I've ever seen anybody explain it properly. The fact
No.
that it's not the claim percent, it's the total dwelling. So if
Yeah.
you've got, like you said, that 5% max deductible on $100,000 of coverage for the dwelling, and
Right.
you have 4,500 in damage, even though you have a $2,000 deductible, you're going to have to pay that entire thing out of pocket because the
Right.
hurricane deductible would be 5,000.
Yeah, because if it doesn't meet your deductible, that's the other thing people don't pay attention to either. Is if the cost of the damage doesn't meet the deductible threshold, then there is no claim.
Yeah.
You're coming out of pocket no matter what.
And I think that's huge here in South Florida, considering how insane the property values have increased. I mean, and so you're probably seeing most. What do you think, Chris, is the average that you're seeing for like dwelling coverage that you tend to deal with?
I mean, it varies by location because I go all over the entire state, but
Okay.
On average, I'm doing on average anywhere from probably say around 300 and up on the dwelling coverage.
Mhm.
So let's say on average 400,000. A 2% deductible on $400,000 in coverage is $8,000 deductible for hurricane.
Yeah.
But if you have a 5% deductible on $400,000 of coverage, 20 grand. That's a big difference. That can
Unless
make or
the
break.
house is like a total loss or significantly damaged in a hurricane, which
It has to
unless
be
you take a direct
significantly
hit,
damaged. Yeah. I mean, that's the big key right there. Significantly damaged enough to be more than that $20,000 repairs.
Yeah.
If you have a tile roof and a couple of tiles go missing from a hurricane, $1,500. You're looking at. So it's not going to meet it. You might get up to a $10,000 claim, but if you have a 5% deductible, you still have to come out of pocket 20 grand before the insurance company will pay $1 towards the claim.
I would
And
bet
so a lot of
90%
people
of
looking
people
at
don't
that,
realize that.
they don't. And then on the other aspect, the other deductible that you have there is the all other perils deductible. So that's pretty much anything other than the hurricane, the named storm. And the average deductible that we're putting on that nowadays is about $2,500.
Mm-hmm.
So when people come and they have a plumbing leak or a roof leak, and they're like, is this going to be covered? It's like, well, before we do anything, go get an estimate. Stop it from leaking. Go get an estimate for the repair, and let's see what that looks like. Because the worst thing you can do right now is file a water damage claim. Unfortunately, that's a touchy, very, very touchy situation. Hurricanes fall under the acts of God, so you can't necessarily be punished for filing a hurricane claim, but you can be punished for filing anything other than that. In the home insurance space, when it comes to water damage of any kind, plumbing leak, overflow, roof leak, like I said, they will come and that will restrict you from being able to get insurance elsewhere. A lot of carriers don't want business from you if you've had a claim on any property in the last 3 years for water damage.
Man.
Some carriers have different thresholds. Some of them will say anything more than one or more than two, but that becomes a very common issue with a couple of carriers that would be coming down to the wire, ready to finalize a policy, or we're feeling like we have a really good quote for this customer, and we get all the way through it, and then it's like, oh, this house had a water claim or 2 water claims, or the customer had a water claim on their previous house. Now we got to move on to the next one.
Jeez.
That could be a big difference. It could be a big rate difference. And it's not just the buyer, it's the seller too. It's the house, the property they're purchasing.
Mm-hmm.
It's the house that they're purchasing. It follows, the claims follow the house that they're purchasing, and it also follows them. So any claim that they put in the past and any house that they're purchasing at the moment, if the current seller made a claim. So all that gets taken into account.
Man, Chris, I tell you, you are a plethora of information when it comes to insurance with this stuff.
I know we've talked a lot of negative on insurance. Has there been a situation where you've been with the client and the insurance, the coverage you gave them was the right coverage and actually helped them out, kind of thing, like something unexpected happened, and if that insurance policy wasn't in there, they'd be done?
Yeah. So a big one, honestly, it really goes, we're going to go back on this topic. We're going to go back to flood insurance. I had a client that was really against buying flood insurance, and I talked him into it just because I know the importance of it. I've seen what, we all saw what happened with
Mhm.
Hurricane Harvey over in Texas. That was a nightmare. And so we've really, in my agency, we've really been pushing everybody to get flood insurance. So I talked to the customer about it up front when we're purchasing a policy, and I follow up through email after that to make sure that they're getting information about flood insurance, and until they tell me, like, leave me alone. You know what I mean? But I'm going to do my due diligence to tell them. So in this particular scenario, this customer did not want flood insurance, and he kind of gave me a lot of pushback. And finally, I was kind of able to make him at least agree to it for 1 year. And that was last year. And then Hurricane Ian hit. His house was flooded 3 to 4 feet of water. I'm sorry, 5 feet of water. His house was 5 feet. I had a couple other customers that had the same issue. His house was 5 feet of water. He had to carry his dogs and his children out of the house at 3 o'clock in the morning
Jeez.
and find shelter. His car's completely floated down the street. He calls me, the next day or 2 days later when he kind of got everything together, and he was like, "Thank God we got that. Thank God I purchased that." And I was like, "Yeah," and it's not a fun process. It's not an easy process to really go through in any regard, but at least that coverage is there so that he can rebuild his house, put his house back together, post flood damage, which is insane.
Yeah,
It's
how much in
big deal.
general does flood insurance usually cost compared to homeowners insurance?
So it's actually started varying a lot. They just came out with risk rating 2.0 for the National Flood Insurance Program. So there's no more standardized flood price.
Mhm.
It used to be if you're in a low risk flood zone, you had this rate period across the board, no matter what. Now that's going to vary depending on the property.
Okay.
But thankfully, they did also make another change where private flood insurance is now accepted by the mortgage companies. And so what you see with private flood insurance is a lot less cost and actually a lot more coverage, which people don't really pay attention to. It's another thing I want to kind of push out there more that I talk to everybody about. But you're typically for a low risk flood zone, more often than not, you're around the $500 mark, give or take. I have a few that are in the high 300s, just sub $400 price. But for the most part, they're around 500, 600 on average. But again, when it comes to the private market, you're getting so much more coverage. A lot of people
Mhm.
don't realize on the National Flood Insurance Program, the NFIP policy, they only give you coverage for your building and for your contents. That's it. So, scenario where you get your house flooded and you have to leave and find shelter. Now you're, 3 months, especially if it's a major catastrophe, you're 3-4 months out, living in your home. You're coming out of pocket for that. You're staying in a shelter. You're finding a house to rent, and that's out of your pocket. Whereas with the private flood insurance, they actually will they actually include in their policies, a lot of them, not all of them, but a lot of them will include loss of use, which will give you the additional costs that you're spending on renting a house over and above, because we all still have to make our mortgage payment when that happens.
Yeah.
We have to either shut off utilities or continue to pay them depending on the situation. So you still have all those bills that you have to pay. So how am I going to come out of pocket now to rent a house for another 3 months? How am I going to come out of pocket to stay in a hotel for a couple weeks? So that's what that coverage is there for. It's going to pay the costs over and above what your normal costs
Mhm.
are. So you can still pay your mortgage, and then they're going to cover you to stay in that property. So that's a big piece. Every company is a little bit different. They offer different coverage ranges, so you got to pay attention to that also. I have one company that will offer 10 grand. I have another company that offers 50. So, we try to push everybody obviously into the 50 if it makes sense financially. But that's just another thing that people got to be aware of. But yeah, that was a big going back to your question originally, is that was a big question that a lot of people had, is like, what's my rate going to be? And it's not standardized anymore, unfortunately, but there are options to offset those issues, and for the most part, better options when you're talking private flood insurance, in my opinion.
Yeah.
Well, I know they changed the flood maps recently, and in the last couple of years, so if we pull up a house and it's in a flood zone, automatically, like, we require them to have flood insurance.
Right.
Now they
Now,
can get a certificate.
Stephen,
right?
what do you actually determine as a flood zone? Because there's like low and high. Is it if they're in a low
It's
risk?
the high, yeah.
The
I
highest.
mean, technically all of Florida's flood zone, basically.
Right.
Yeah, pretty much.
But isn't there a certificate they can get to kind of say, hey, the house, the property line might be in there, but the house itself is not?
Right. So that's usually done on our side, or they can, I mean, typically you can look it up on the FEMA flood map website. And it'll give you that flood map where it kind of draws the blue line, and then you can kind of see where the property sits and you can see if it touches. When we run a flood insurance quote, it tells us right then and there, and it gives us a map typically showing where all of that is. It pulls that data for us right away. So we can tell right away. And I actually just had a Citizens customer who called in because Citizens is saying he's in a flood zone. And he's like, I'm not in a flood zone. So I pulled it all up. I pulled the map up, took a screenshot of the map, sent it over to Citizens because his house wasn't touching the actual flood zone itself. The property, the land can be on the flood zone, but as long as the home is not touching that flood zone, then the house itself is not in a flood zone. Therefore, it shouldn't require flood insurance. I think that's to be true with your mortgage company. I don't know if that holds true for everybody, but for everybody I've dealt with, that's been the case. So for this particular customer, we were able to send that over to the carrier and say, hey, he's actually not in a flood zone. You can see it here. And they removed that requirement from him for now until they make their changes.
That's helpful. Yeah. Kind of show them how that's not really necessary, guys. We don't need that extra.
Well, not for now. I mean, for now, like I said, Citizens did make those changes to their flood requirements. So effective January 1 of 2024, any dwelling, if you have a Citizens policy and your dwelling coverage is 600,000 or more, you'll be required, even if you're in a low risk zone, you're going to be required to carry flood insurance. You have to provide Citizens with proof. January 1, 2025, dwelling coverage of 500,000 or more. 2026, $400,000 or more. And by 2027, it doesn't matter what your coverage is. You have to have a flood insurance policy if you want a Citizens policy. And that goes for condos too. So it doesn't matter if you're on the 5th floor or the 18th floor or the 1st floor. If you have a condo insurance policy with Citizens, you will be also required to carry the flood insurance.
That's interesting.
On that as well. And there's a little bit of nuances to that as far as what coverage you need, but for the most part, it's going to be a requirement. So you just got to, whoever's listening, you got to talk to your insurance agent and make sure that it's covered properly.
Well, kind of based off what we've been talking about here, it really, I think the last point you made is if you're going to talk to an insurance person, make sure you're talking to somebody that knows the ins and the outs and the nuances of all the different variations of these policies. Because if you don't, just like the person you were talking about where Citizens said they need that flood insurance and they really didn't, at least to that level. I mean, that saves the money right there. And if you have an agent that knows that that's the case, that type of person can actually help save you money. While if you have someone that doesn't, just takes the insurance carrier's word for it, you're going to be paying for something maybe you didn't really need, at least yet.
Right.
So
now I have my own approach to flood insurance is it's one of those things that's better to have and not need than to need and not have. And like Steven said earlier, all of Florida is a flood zone. There was a study done a couple of years back where 40% of all flood insurance claims were made from low risk flood zones. So it's not that it's impossible to happen. We saw that with Fort Lauderdale recently. Fort Lauderdale got completely flooded. And some of those areas were not flood zones. I believe the main airport area is, but I think the surrounding areas weren't. So, it can happen. It's not, it's not impossible. And that's why, they have these zones and they tell you it's a 1 in 100 year, 1 in 500 year, whatever. Because it is a possibility and it can happen. So like I said, it's one of those things just better to have and not need than to need and not have, especially if the price is, less than $400 or less than $600 for the year. It just makes sense. And rather than coming out of pocket 20, 30 grand to fix your home.
Like we're not in a flood zone and we have it. It's just a check the box, have it just in case kind of thing.
Right.
It's a lot like umbrella insurance, umbrella liability. It says, hey,
Yeah.
relatively inexpensive for what you get, for the protection you get. If you need it, or even if you kind of need it, might as well get it.
Oh, and it's huge. I mean, look, at the end of the day, we live, as we've seen, as of what I said, we live in a very sue happy time. Everybody wants to sue for something. And this is kind of going more into car insurance, but there's all kinds of people out there that don't carry proper coverage and are looking to capitalize on you. That's just trying to get to work and make your money and do your thing, and they're going to try and take advantage of you. So to have that protection, especially if you have a lot of assets, that's a huge piece to your protection for sure.
Yeah, but hey, man, Chris, has been a lot of great information, and I really appreciate you sharing it with everybody. Steven, did you want to hit on anything else with Chris while we got him stuck here?
Yeah, he's stuck here. He's not frightened of talking to us.
Ain't going nowhere.
Okay. No, I think that's it. He hit all the points. Is there any final advice for people looking out, maybe, buying a house when they're looking at houses? Anything you would tell them insurance wise, what to look for?
Yeah. The biggest things is right now is obviously the newer the roof, the better. But if they do have a new roof, find out why. Make sure it's, hopefully it's not claim related per se. And the other aspect is if you can, it's not always possible, but if you can, the newer the property is, typically the less expensive your rate's going to be. So try as much as you can to gear towards newer homes versus the older homes. The older it gets, the more pricey it gets, especially depending on location. So just
now
keep an eye out for that.
There was was it a law or litigation that was passed legislation that if the roof is 5 years old, has 5 years left of life, they have to insure it?
Yeah, well, they can't they don't have to insure it, but they can't cancel you because of that specifically. Gotcha. So that's the loophole right there, right? We've seen it already. We've had carriers that say, oh, well, the roof is old, but we're also going to cancel because we're not going to insure in this area anymore.
Yeah. Right.
Or we don't take this type of whatever.
Well, and then the following year, the roof's remaining life is now 4 years.
Right. So now carriers have a roof schedule built into their policies. So, typically for the first 5 years, you get full replacement value. But after that 5th year, they're going to slowly reduce the amount of replacement that they'll offer. So 90%, 80%, 75%. It slowly trickles down the older it gets. And that's to put more responsibility on the homeowner to say, hey, you can't just use us as a warranty plan. Right. You are going to be responsible for a portion of this if that's the case, if it is older. So
insurance that makes sense. That stuff that goes out of life cycle. I mean, right. Once it's used up.
Right. So awesome.
But, so Chris, where can people find you or get a hold of you on the interwebs out there somewhere?
On the interweb. So my website is www.tibfl.com. But most people will just send me an email or give me a call. The office number is 772-900-5842. Or you can email at quotes at tibfl.com.
All right. We'll also put that in the show notes there for everybody, but
maybe.
Awesome.
Well, yeah, if I get around to it, but Chris, thanks for stopping by, man. I appreciate you sharing all your wisdom and knowledge with everybody. Hopefully you helped impart some stuff everybody wishes that they knew earlier. So
definitely, yeah. If anybody has any other questions, or if you guys have any other questions, feel free to reach out to me. Open book. So even if you're not buying from me, I'm happy to help.
Great. So, hey, thanks for joining us, everybody. If you have anything you want us to talk about here in the future, go ahead and drop us a note or an email or a comment down below, and we'll talk to you all next time. Say bye, everybody.
Bye, everybody.
Bye, everyone. Take care.